The stock market is absolutely crushing it since the beginning of the year after seeing some great growth in 2023 and in 2024. But while everything looks to be quite expensive right now, there are still great undervalued companies that are currently trading on the market. And it is why in this video, you'll find 3 of the best companies that should be on your watch list for the month of November of 2025. The first business is the company Merck & Co. with the ticker MRK. Since the beginning of 2025, this American multinational hasn't been on a great momentum where it has been down close to 10%. This unfortunate momentum came because the company is currently facing some specific products challenges, such as their ongoing challenges concerning their Gardasil vaccine in China, where demand has fallen significantly, leading to a pause in shipments to reduce their inventory. Add to this, revenue-wise, the company is still quite dependent on their cancer immunotherapy drug Keytruda that currently accounts for close to 50% of their total sales. All of this has made that they have been forced to revise their 2025 guidance to lower their standards compared to what they were expecting. However, the positive point about this business is that recently it can be seen that the company has restarted to see some great growth because notably of their great financial results that they've just reported. Indeed, despite a slight increase of only 4% year over year in their quarterly revenue, we've been able to see a massive increase of over 80% year over year concerning their net income, which came notably because of their lower research and development costs. And this has also greatly helped them to increase their quarterly earnings per share year over year, which have helped them at the end of the day to beat the analyst expectations for both the EPS and their total quarterly revenue. So despite an estimated tariffs impacts of about $200 million for the two first quarters of 2025, it is fair to say that this company has been able to keep their business model quite competitive and profitable. Plus, with the aging of the population, different products such as Keytruda will definitely have an importance in the near future, notably to be able to fight against disease such as cancer. From an investor point of view, despite seeing the company that has been on a certain decline since mid of 2024, we've seen that recently it has been able to bounce back. And right now, it is currently trading at a super cheap price to earnings ratio of only 11, which could represent a great potential buying opportunity. Plus, even if this company might not be able to compete against companies such as Amazon and Nvidia in terms of their potential of growth, this business remains pretty interesting for people looking for great passive income, where it currently distributes a quarterly dividend of about 3.7%. But now, talking about another business that has a lot of potential of growth for the future, the second pick on my list is the business Meta with the ticker META. Previously known as Facebook, this business has been by far one of the best performers in my whole investing portfolio of these past 5 years, returning over 150% during that period. However, recently, we've seen that the company has started to correct and lose a certain part of its total value over the past couple of weeks. The reason behind Meta's worst day of these past 3 years came in their latest earnings report, notably with more spending when it comes to the AI infrastructure. However, when we know Mark Zuckerberg and Meta as the company, it isn't that surprising to see that they are currently ramping up the investments into the AI field, knowing all the competition that there are. In fact, the social media giant raised its recent capital expenditures guidance for 2025, where it now expects capex to range between $70 to $72 billion, where its prior guidance was of between $66 to $72 billion. This massive AI spendings notably includes different acquisitions, such as their latest ones of about $14.3 billion acquisition of the AI startup Scale AI. Nevertheless, I remain quite optimistic for this company as a whole, even if in their latest earnings report, we've seen a massive decrease of their total net income, mainly due to higher expenses, notably their provision for income tax of $15.93 billion related to the implementation of the One Big Beautiful Bill Act. The positive thing that occurs during that quarter was notably the massive increase of about 26% year over year into their total quarterly revenue. And surprisingly, this has helped Meta to outperform the analyst expectations when it comes to both their quarterly revenue and their quarterly earnings per share. At the same time, even if Meta is currently massively investing into their AI to notably develop new AI data centers, to integrate their AI to their different platforms, and to develop their reality labs, aka the metaverse, notably with their new AI glasses, Meta remains the top dogs worldwide when it comes to the social media sphere. By holding three of the most popular and well-known social media platforms worldwide, which are Facebook, Instagram, and WhatsApp, it is fair to say that Meta holds an important part of this super lucrative market. It is also one of the reasons why this company remains one of the most important holdings that I have in my portfolio and why I have such high hopes towards it. And at the same time, it is still trading at a quite fair P ratio compared to some other big tech companies, and it also has some incredibly great profit margins. It is why for me, the most recent dip that we've seen concerning this company is just an opportunity for me to potentially buy more shares of this business. The final pick on my list is one company that might not be known by everyone, but it is the business Schlumberger with the ticker SLB. Unlike the classical energy companies, Schlumberger is a business that basically is a service companies for different energy businesses. It means that they help other businesses, notably by providing a wide range of services and products across the entire energy life cycle, from exploration and drilling, passing by the production and the digital solutions using their different AI tools. This business is not only working into the physical aspect of the energy sector, for example, by building wells, but they are also implementing digital solutions, notably by using their AI and their cloud-based tools for data interpretation and production optimization. In recent years, Schlumberger has also decided to switch towards more renewable energy solutions, which is pretty good if you ask me, because it means that the company is able to adapt to tomorrow's environment. And what is pretty interesting for the investors concerning this business is the fact that despite being slightly down since the beginning of the year, the analysts still have a 43% upside potential concerning this business. But why is that the case? Well, despite having faced a rough beginning of the year financially with their earnings report due to commodity risk and a slowdown in their customer activity, the positive thing about the business is that it remains financially strong. Indeed, as you can see, between 2021 and 2024, the business has been able to greatly increase their total revenue, which has been driven up by the multiple acquisitions that they've made, with their more recent one being made at the end of the summer with the acquisitions of the ChampionX company for a deal estimated to about $7.8 billion. So all of this has made that the company is on track to return over $4 billion to their shareholders before the end of 2025. From an investor point of view, this company remains also pretty interesting by trading at a super low P ratio of only 11 and by offering a 3% quarterly dividends to their shareholders. So even if this business remains quite less volatile than another business such as Meta with a beta of about 1, it remains that it continues to pay some great dividends and it gives more stability to their shareholders. And despite having faced certain troubles these past 2 years, we can still see that over the past 5 years, it has been able to massively outperform the total return of the overall stock market. So it definitely remains a company that I currently have on my watch list for the month of November of 2025. But now that you've just found 3 of the best companies that are currently interesting for you to keep an eye on for the next month of November, you might be wondering what are the different companies and ETFs that I currently have in my own investing portfolio? Well, to find the answer to this question, check out the video that's going to be right over here, and I will see you soon. Peace!